Hey guys, Dr. Tom Carr here of drstoxx.com, drstoxx.com. Just a quick reminder, you've got 11 days left now to give a free trial to any one of our 5 weekly or daily stock pick letters. Subscribe to all 5, no cost to you for the first 30 days. Just click the subscribe button on our website, drstoxx.com, and type in free trial, all one word, all uppercase, into the discount code box, and you're good to go. Let's look at a few charts tonight, and I've got a couple of stocks that I wanted to throw your way as some potential stocks for purchase tomorrow morning, Friday morning at the open. But first, let's look at a couple of indexes here. We're looking at the spiders, the S&P 500. This is the proxy for the S&P 500. And as you can see from the trend lines I've drawn in over this 3-month, very tight trading range, choppy trading, trendless trading. It's just been miserable if you're a trend following trader like I am. But some good news is that for the last couple of days, last 3 days now, we've either closed higher or at the highs of the day. That's a good sign for the bulls. We're also starting to see a little bit of bullish momentum work its way into the indicators. We've almost got a new buy signal on the MACD and a couple of other things that I'm looking at. So all that is good news. We also had Microsoft come out after hours this evening with very good earnings. It's now trading at new all-time highs in the after-hours market. And everything else it reported today also looked pretty good. We had a biotech company come out, huge upside, which dragged the whole sector higher. So all sorts of good things are happening. And I do believe we're going to be working our way through this election political risk scenario that we're in right now shortly. But until we get a breakout of this wedge that we see right here in the right edge of the chart, the upper right edge of the chart, it's still going to be kind of difficult trading. But let's look at a couple of charts here. Okay, first up is one of my favorite trading vehicles, and it is the 3X Bull Biotech Index ETF. So if you're trading this, you are leveraged 3 times the standard biotech index, which you can track using IBB. That's the ETF for the biotech index, or one of the several that are out there. That's the main one. I like biotech as of today. Now, I've been very rather bearish biotech for obvious reasons because since late September we've been in this steady sell-off, but we've pulled back into the 200-day moving average, which is a good sign. This price has held at that area. We've seen some excessive volume, which is normally what you want to see at the bottom of a pullback, because that excessive volume is getting rid of a lot of supply, and once the selling stops, then it has only one direction to go, and that would be up. And we saw a really nice bounce into the close today in today's trading, and then another bounce after hours in response to a company that came out with some very good clinical data. We also have a nice little trend line working here. It's working higher. It's not the most exciting trend out there, but hey, at least it's trending. It's not going sideways like the S&P 500. So, and we're at the support line, and it's just technical analysis 101. Buy support, sell resistance when you're in a trend channel like this. So all that's to say, I like the biotech index going forward. I would be a buyer of Labu if you're not already long. I'm already long. And there are a couple of biotech stocks that I wanted to point out to you. One is Jazz Pharmaceutical, one of my favorite stocks. It is one of those rare biotech companies that has actual earnings. In fact, it has quite a lot of earnings. Trades at a very reasonable PE ratio and a very low forward PE ratio. And it's got a ton of growth. I mean, it grew EPS 460% this past year. So it has been beaten down, like most biotechs, big cap biotechs, has been beaten down to a place of support, and it has put in this nice double bottom. If we were to show some indicators, you'd see that there is some bullish divergence on this double bottom, especially in the MACD indicator. The MACD indicator on this right touch of the bottom here is very much higher than the left side. I got our subscribers into Jazz this morning below 120, and it closed today at 121.61, and so that was a nice one-day move. But I see this going quite a bit higher. I do see it breaking above 130, which would be the pivot point for the double bottom, and then you've got a double bottom that starts at around 117, goes to 130. That's 13 points, and you add that to 130, you get 143 up here, 144 for our target price. So that's a nice, reasonable 20% gain or so on your shares. And if you like your biotech trades on the riskier side, you might take a look at Excelsis, EXEL, which is a typical speculative biotech, has no real earnings, does have revenues, but no real earnings. It's got two big blockbuster drugs in its pipeline, one of which has had all kinds of great news out about it, and that caused a lot of this run-up that you see here in May, June, and July. And then early August, it had this huge earnings beat, which took everyone by surprise. And this is a stock that analysts absolutely love. Everyone's on board with a buy or better. Huge price target, so it's got a lot of good momentum that way as well. Now it's had some pullback here, a little ABC pullback, and if we can draw on a trend line, you'll see that it's right more or less at the support line of this channel, which I have a sense is the dominant trend that we're looking at here, and in which case we're very near to support, and we should see some buyers come in at this point if I'm correct on that. The fall off here was a report out of Europe on one of those two blockbuster drugs that it was competing with Pfizer in a way that might be disadvantageous to Excelsis. But most analysts that I've read have said that those concerns are overdone. It's a different kind of drug. It's got very positive feedback, et cetera, et cetera. So I do sense this is a very good buying opportunity. It traded up to about 15.50. Here it is now at 11.74 a few weeks later. We could see this rally on up into the low 20s from here for a nice 100% return. I would make sure that you put in a stop loss somewhere below the $11 line, because if I'm incorrect about this trend, it could fall very sharply from here. So this is high risk trade, but I'm just throwing it out there to maybe you can put on a small position here and just let it run for a few weeks and see what happens. All right, everybody. God bless. We'll see you next week. Bye now.